Welcome to the MUFG Global Markets FX Week Ahead podcast with Derek Halpenny, Head of Research, Global Markets EMEA and International Securities. It's Friday, 4th July 2025, and joining Derek to pose some questions on the financial market themes for the week ahead is Julie Ellert, Head of FX FraBelux Corporate Sales. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hello, Derek. Really great to speak with you today.
Hi, Julie. Yes, good to catch up. I hope all is well.
Yeah, thank you. I've been looking forward to this conversation, especially after such a busy week.
Yeah.
I've been wondering, given the combination of stronger than expected Shunto wage growth, household spending, and persistent inflation pressures in Japan, how likely do you think now a BoJ rates hike in September is now?
Yeah, I think this theme, Julie, around this question, I think is something that could start to gain some traction going forward. Obviously, we have a big event next week or maybe even over the weekend when we get some information in regard to the reciprocal tariff rates that will go live on the 9th of July. But throughout the period of the second quarter since the 2nd of April initial announcements, I think the BoJ have been pretty cautious. They've held back on anything that would fuel any kind of speculation on a rate hike that could have created volatility and a tightening of financial market conditions in Japan. They really want to get a sense of what kind of economic damage could be done by tariffs from Trump. But, we're going to get clarity on that one way or the other. If what we assume is correct, and I think it's definitely what the markets assume as well, that we're not going to get a repetition of the reciprocal rates from April 2nd. Like, I know Trump today has warned of a range between 10 and 70%. Let me just say clearly that if there's big major developed economies at the higher end of that scale, we'll see a very big reaction to that. But on the assumption that there's some reining back, some balanced cautious steps taken with lower rates than what were announced on the 2nd of April, then I think we might be in a position where the BoJ become a bit more confident on the need. I will use the word need for another rate hike, because when you look at the data, and you mentioned some of it, Julie, in terms of the household spending, the real household spending data today, 4.7% higher. Yes, that was distorted by a base effect in auto sales, but even stripping that out, there was still signs of strong spending. The Shunto wage figure was formalized yesterday at 5.25%. That's up a little bit from 5.1% last year. So we've got confirmation of that. The actual CPI data in June for the month of May, the nationwide figure, was much stronger than expected. The Tokyo data showed the nationwide figures will probably come back down a bit in the June data released this month. But the forecast from the BoJ in the latest forecasts that were released at the end of April, beginning of May, 1st of May, I think it was, the forecast was 2.2% for fiscal year 2025 on core nationwide CPI. That's running at 3.7% at the moment. So, the inflation figures are too low. So they're going to have to lift those forecasts at the July meeting. And given inflation is moving higher, and we have the policy rate on hold, the level of real policy rate is actually declining. So, policy is becoming more accommodative with higher inflation. And there must come a point in such a scenario where I think the BoJ is going to have to start changing its communication. It's going to have to indicate the potential for a rate hike. And I think, one of the meetings through the rest of this year, I think it's more likely than not that we'll get another rate hike from the BoJ.
Thanks, Derek. Let me dig into that a little. With markets currently so underpricing the possibility of the BoJ hike, do you see scope for repricing that could drive the yen strength, especially against dollar?
Yeah, like again, I go back to what I said at the beginning. Let's make the assumption that we don't get, aggressive tariff announcements, and the global growth picture doesn't deteriorate, and financial markets are, reasonably contained. Then, the BoJ has a job to do. And when you look at the pricing in OIS and the OIS forward curve, September is just about 2 basis points. And by the end of the year, we've got about 12 basis points. So, like July, obviously, I think is out of the question. But I think September is very feasible still. And that's just priced at 2 basis points. So if you were to get more confident, explicit communication post these tariff announcements, then I think the markets will have to respond. And then you're in the realms of the yen being in a better position to outperform. Now, obviously, we've got a broader dollar bearish view anyway. So, given the Fed, we think later this year, will cut rates, and we could be in a situation where the BoJ is raising rates. That opens up, plenty of scope for dollar yen to move to the downside. And there's a lot of catch up in dollar yen. If you consider where DXY is trading today, DXY is basically back around levels where we were at the beginning of the move higher for the dollar, when the global inflation shock really started to kick in when Russia invaded Ukraine. So, kind of February, March 2022. That's where DXY is back at now. Dollar yen back in March 2022 was below 120. It was trading 117. So, DXY is back at those levels, and dollar yen is still at 144. So, there's plenty of scope, I think, for dollar yen to come down. Some of what needs to happen is, of course, the BoJ to be perceived as being a bit more active in terms of removing policy accommodation, which I think now is definitely more justified.
Right. You mentioned tariff. I would love also to have your perspective on July 9th. Could tariff escalation, particularly with Asian economies like Vietnam or Japan, trigger safe haven flows into the yen? And how does that interplay with current BoJ rates speculation, Derek?
Yeah, I think it's a bit of a tricky one, to be honest, and especially maybe when you're talking about dollar yen. And I think the way to answer that question in terms of how the markets would respond is to kind of make an assessment in terms of equities. Because, let's say there's a much more aggressive tariff announcement. Now, the consequences of that are inflationary for the US and maybe growth negative from a global growth perspective. Now, given the inflationary impact domestically, although there's a negative growth implication as well, you could certainly see US Treasury yields moving higher. Now, if the Treasury yield move is pretty substantial, I'm talking 10, 15 basis points, certainly relatively quickly, but the equity market sell-off is more contained, which is certainly very feasible if you consider, it's remarkable that the S&P 500, closed yesterday at another record high. So equity market resilience is really still very evident. So if yields move up, but we don't see a big equity market sell-off, well, then dollar yen would probably go higher, because it's not really a substantial risk off, and there's no capital flight into the US Treasury market, so yields go higher. If it's more severe and there's an equity market shock and we see considerable selling, certainly in the immediate bout of considerable equity selling, yields, I think, would go lower. Now, they could ultimately move back up again like they did in April, but ultimately, initially, they would go lower. And I think then you see the safe haven status of the yen more evident. I think dollar yen would go lower. And so, a lot of it is about yields, and it's about Fed pricing versus growth expectations and how those change relative to each other. But, if you look back at April, there was triple asset selling for certainly a number of different days. You should, I guess you could definitely get a repetition of that. But I think net, if you take it over a period of a month or more, I would still say that the ultimate backdrop would be dollar negative, because it would undermine confidence and there would be growth uncertainty. I think in that mix, you would see the dollar weaken. But the initial reaction is, you need to balance up the moves in equities versus rates for certainly the dollar yen rate.
That makes sense. Thank you so much, Derek. That was really insightful.
Thanks, Julie. Good to talk to you, and have a lovely weekend.
Thank you. Looking forward to another exciting week ahead.
Thanks. Bye.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe. Contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets research team.